Hi everyone, welcome to our webinar on the state of the mobile money industry in Africa. I think we'll give it a couple more minutes for more people to join, and we'll start about 3 or 4 past. Thank you. Hi everyone. So welcome to our webinar on the state of the mobile money industry in Africa. It's great to have you with us. Especially glad to, I hope you can see me as well. Especially glad to do this during the Financial Inclusion Week, of course. Without further ado, I hope we have enough people on the call now. So my name is Simon Anderson Manjang. I am the data manager for the mobile money program at the GSMA. We're also joined by Tapiwa Jakachira, who is one of our data analysts focusing on Africa. He's been working and been putting together a lot of the quantitative points behind this presentation. And then we're also joined by Kennedy Kipkemboy, who is our regulatory specialist on Africa based in Nairobi. And I'm not sure if you can see all of us, but if you can, and if the rest of you see, just give a wave. But so I wanted to sort of explain what this is as well. So this is what we call a regional cut out of our global state of the industry report, which was published back in March. So this is actually also the first time that we do an aggregation on the continental level. We're looking to sort of move away from the term sub-Saharan Africa in order. Taking a more continental approach is something that's favored by the African Union. So I think it's helpful to talk about the continent as a whole. We also have this event as a bit of a follow-on from our Thrive Africa event, which was a GSMA-wide event at the beginning of the month. Hopefully some of you were there. What else? Any more housekeeping? I should mention we have a Q&A box that you all should be able to see. So you can pop any questions into that. And myself, Tapiwa, and Kennedy will stick around for a Q&A session after the presentation. With that, I think I'll move into the actual presentation. We'll start with a few figures at a global level. So just to contextualize Africa, let's look at a bit what happened last year. So 2019 was obviously a momentous year for mobile money. We saw the industry reach 1 billion registered account. Hopefully, a lot of you have seen that figure fly around online. We also saw 77 mobile money services now having more than 1 million active accounts. Despite strong growth in Asia, Africa was the region that added the most registered accounts in 2019, 51 million, as you can see down in the corner. And I guess a bit of a caveat, we should mention that this data was collected during 2019. So this is, you won't see a reflection of COVID-19, the COVID-19 pandemic in the data. Having said that, we will touch on a few points around COVID-19. Kennedy especially will dive in and look at some of the responses from regulators and so on. But nevertheless, I think it makes sense to see sort of exactly where we were at the beginning of this year, and we can also sort of touch a bit on where we think we're heading towards the end of the presentation. With that, I'll hand over to Tapiwa, who will take us through some of the accounts and agent figures for Africa.
Good morning, everyone, and afternoon to some of you. And thank you very much, Simon. As my colleague Simon highlighted in the previous slide, mobile money reached a tremendous 1 billion milestone in 2019. This was an impressive feat and was underpinned by impressive mobile money growth from African accounts. The region has pioneered the innovation behind mobile money and has long viewed as the epicenter of this growing industry. If we take a look at the numbers coming out of Africa, we can see a very strengthening mobile money landscape, which is showing no signs of slowing down. For example, if in 2019 alone, 51 million new African accounts were added, and this took the total number of registered accounts on the continent to 481 million accounts. This roughly translates to about 46% of all mobile money accounts globally, and this is very significant as it puts the region firmly on track to exceed 500 million accounts by the end of 2020. If we break down the sub-regions, we can see that Eastern Africa still dominates the mobile money landscape in Africa. However, what we can also see is Western Africa and Central Africa have been gradually increasing their share of registered accounts, and they both grew at a faster rate than Eastern Africa during 2019. We will explore the highlights from each region on the next slide. So 2019 was an impressive year for mobile money in Africa, which is home to 156 services spanning across 45 African nations. If we dive deeper to look at the sub-regional level, we can observe impressive growth across the board, and we can see different themes emerging from the different regions. Eastern Africa grew its monthly active accounts by 10.6% to exceed 100 million, meaning that at least 1 in 3 Eastern African adults use mobile money on a monthly basis. There is still room to grow as we are seeing some traction in the market with massive potential such as Ethiopia, where there has been some liberalization of telecom market to provide a mobile financial service offering. This is something that maybe my colleague Kennedy can touch on later. And if we look elsewhere, we have also seen strong accounts growth from Central Africa, which has doubled its accounts over the last 3 years. Southern Africa and Western Africa have both outpaced the growth of Eastern Africa in terms of accounts, transactional values, and volumes. In Western Africa, the growth has been supported by impressive performance from countries such as Ghana and Senegal, which are surely becoming mobile money powerhouses. We also see Nigeria continue to be a country of interest, and it was very encouraging to see an influx of foreign investment to the tune of more than $200 million into the Nigerian mobile money space. If we move away a bit from the impressive accounts growth for a bit, we have also seen the emergence of what we call adjacent offerings, and these are additional products for mobile money. Particularly in Eastern Africa, over 5.2 million mobile money enabled policies were issued in Eastern Africa, while we've also seen an adoption of savings in Northern Africa. So moving on to the next slide, we will look at the active usage of mobile money accounts in Africa. Looking at accounts usage, what we can see is that mobile money account usage has increased across the continent, with active accounts growing by 15% to reach 183 million. It is impressive to see that Africa now hosts 40 services with more than 1 million active accounts. This is a figure that has almost trebled from 15 in the past 5 years. It's even more impressive the fact that 6 African services now have over an impressive 5 million accounts, which are active on a monthly basis. This shows that mobile money clearly continues to play a vital role in the financial inclusion of the African population, as 1 in every 4 adult citizens of African countries where mobile money is available is an active user. Next slide, please, Simon. So in the previous slides, we have discussed at length the impressive adoption of mobile money across the African continent. But if we take a minute to truly appreciate the impact of mobile money and what this means for the African population. So with me here, I have a chart which has plotted GDP per capita on your left and the share of adults who are financially excluded within the continent. As you can see, dark circles represent the countries where mobile money is available, and the size of the circles are proportional to the level of mobile money penetration. What we can see clearly from this chart is that the poorest of African countries have the highest level of financial inclusion. Furthermore, and on a more positive note, we can also see that these are the countries where mobile money is now available as a means of financial inclusion. And these are the countries that are bunched in the bottom right hand of the chart. So, what does this mean for mobile money in Africa? So first of all, it means that mobile money is addressing an issue that has been on the continent of financial inclusion, and it has the potential to increase financial inclusion not only for the African population but also for women and close the gender gap in access to financial services in these low and middle income African countries, which is obviously key to achieving SDG 5, gender equality. So we'll now take a look at the invaluable agent network on the next slide. So moving on from adoption, we'll look at mobile money agents who have spread its reach to rural areas and hard to reach places, and they have had a very transformative impact on financial inclusion. As of December 2019, continent had 3.4 million agents, of which 1.9 were active on a monthly basis. In terms of reach, this translates approximately to 340 agent outlets for 100,000 adults, compared to only 6 for bank branches and 13 for ATMs in Africa. This expansive distribution network was key to digitizing over 124 billion on the continent in 2019. The investment in the distribution networks across the continent not only aids adoption and usage of mobile money, but has also created opportunities for entrepreneurs in emerging markets to become agents. This has helped micro businesses to generate substantial additional income. For instance, if we look at 2019 alone, an average African mobile money agent received approximately $700 of commission for mobile money. So this obviously most of these agents have other businesses, so this would be $700 additional income. And according to our analysis, this additional income is actually enough to put a child through primary and secondary school in some countries, such as Cote d'Ivoire and Ghana. Now, as the uptake of mobile money services continues, it's going to be important to maintain and expand and evolve these agent networks as they become even more critical to ensure a high quality of services. My colleague Brian will touch upon some of the support that the agent networks have received during these tough times, and just to show what the industry has been doing for mobile money. I will now pass on to Simon, who will take you through the use cases of mobile money and how some of the key trends that we have observed during 2019. Thank you.
Great, thank you, Tavira. I guess now that we've sort of established the growth of both accounts and agents and the agent network, we wanted to have a look at transactions. And some of you might have seen a version of this graph before. We had a version of it published in our State of the Industry report. Those have global figures. This is just looking at Africa. These are the ins and outs of mobile money in Africa, as we call it. And I think first, there's a lot going on this slide, so I think it makes sense to sort of talk about each section first. In blue here on our left-hand side, we have digital in and cash in. So cash in is your classic going to an agent and cashing in money. And then digital in, that consists of bulk, which in Africa is primarily driven by salary payments. We have bank to mobile payments, and we have international remittances being received. That's how money enter the mobile money system electronically or digitally rather. Then in the middle, we have circulation. These are person-to-person payments or P2P. We have also merchant payments here at 10%. And as you can see, this is dominated by P2P. I think it's just worth to mention that obviously a lot of informal business activity on the continent is still being done via normal P2P transactions. We've both seen that through research, but also anecdotally, obviously. So it's worth keeping in mind. But then if we move on from circulation and then we look at how money actually exits the mobile money system, obviously it can exit through cash out, which accounts for 67%, as you can see. But increasingly, we see this digital exit point as well. So it's dominated by bill, which in turn is led by utility payments. And then we have M2B, which is mobile to bank payments, ATU, which is airtime top up. And then we have off-net transactions. And then we have IR, which is international remittances being sent. As the header here talks about, there are two trends that we see this year. And the first one is that we now have digital transaction making up the majority of mobile money flows. And we've had a bit of conversation around that, how it's been misunderstood by some people, because obviously we still see cash in dominating the entry point, and we see cash out dominating the exit point. But it's worth noting, as you can see down here in the corner, that obviously the circulating value is also digital. Those are completely digital transactions. So I've actually added a few lines here in order to make it to highlight. So as you can see, the figure in green here is larger than the figure in red at the bottom, 23 over 19 billion. So there are now 23 billion worth of transactions just in December of 2019. So that's a big, the first big trend. It's a bit of a digital threshold. And if we move on to the second trend, it's the fact that more value is now circulating in the mobile money system than exiting. So again, that's the figure in the middle here, 13.6 billion. There we go, highlighting them as well. As you can see, 13.6 larger than 12 billion. So there's now more money circulating than exiting the system. Yeah, this is a very an important point for the industry. It means that it's genuinely digitizing the economies, that money is flowing around digitally without simply entering, going through digitally and then exiting. So a very interesting and exciting point. And I think on the next slide, we'll sort of take you through the last couple of years that we can see this trend, what's actually happened. And you can see that we've reached this tipping point where digital transactions in blue here, the stacked bar charts. As you can see, in 2014, December, digital transactions accounted for 41%. And we're now up to 53% of all transactions. So that is a compound annual growth rate, or CAGR, of 37% year on year. And I think it's worth just noting here at the top of the bar charts as well that the size of the pie is quadrupling essentially from 11.5 billion in 2014 to 42 billion in December 2019. So I guess this is the slide where it's very clear that it tells the story that the industry is very much growing and digitizing. Yeah, it's a good slide to sort of just see what's actually going on. But then if we have a look at sort of the drivers behind this digitization, if we move on to interoperability. As you can see in the blue band here, 27 out of 35 markets are now interoperable. So that translates to roughly three and four markets. And I want to just emphasize before go any further that when we talk about interoperability at the GSMA Mobile Money Program, we talk about account-to-account interoperability and interoperability with banks. So currently, on average, mobile money services with bank integrations are connected to about 10 banks. So you can see in the first sort of peach bubble here. And we also see, in 2019, the flows to and from bank accounts grew by 32%. So we see this connection between mobile money and the traditional financial system continuing to strengthen. And I think it's important to be honest about this. I mean, very few traditional bankers have ever been excited about low value, high volume customers. And that's why mobile money continues to be an important complement to the traditional financial sector rather than a challenger. So money is flowing to and from the traditional financial sector and into the mobile money system, which is an important point to make. And as you can see on the map, we can, depending on your sort of geographical skills, you can see sort of what countries here are the proper interoperable ones. I have listed the full list of countries at the bottom of the page, if geography isn't your strong suit. But as you can see, a lot of the countries are very populous. So many of the most populous parts of the continent are now interoperable. Obviously, Nigeria is in there, but also Egypt, DRC, and the entire East African community. Well, sorry, not entire. South Sudan and Burundi are not there, but we have Kenya, Rwanda, Tanzania, and Uganda. And of course, all of Francophone Western Africa. So it's a big chunk of the continent basically that's now interoperable. And we also we do have a recent paper on interoperability on our website if you want to learn more about it, because it's something that keeps growing. And again, connecting this link between mobile money and the traditional financial system is crucial. And I think on the next slide, yes, we'll go. If we drop out so now that we've looked at interoperability, which is one part of the digitization story, but it's also important to talk about the other, the digital transactions and the mix of them. So what we've done here on these pie charts, we've dropped out the cash in and the cash out, just to look at the breakdown of the digital transactions. So the top two pie charts here are looking at the number of transactions, or volume, as we also call it. Historically, mobile money has sometimes been seen as a bit of a one-trick pony, or maybe two-trick pony, mostly consisting of airtime and P2P. But for the first time this year, or in 2019, airtime top-up is now accounting for less than 50% of all transaction volumes, both in Africa and globally, as you can see. Africa is slightly ahead of the curve than the global figures. It's been a long time coming, and we've seen that trend for the last couple of years, and increasing quickly as we see these ecosystem transactions becoming more and more important. So actually, I think for highlight, so when we talk about ecosystem transactions, we're referring to the ones highlighted here. So that's there we go. So that's bill payments, bulk disbursements, international remittances, and merchant payments. So, in terms of value, the two bottom pie charts, you can see there's a real big chunk now coming from ecosystem transactions. I believe it's around 28%. And again, if we look at IR, for example, 2.4% down here, these are still very large values that we're talking about, even though that in terms of value, they only account for 0.4. If you look further up here, but 2.4 here. We'll talk a bit more about international remittances later on, but I guess obviously this is one of the hardest ones to increase unilaterally, seeing as it's very dependent on regulation. But in general, we see this increase in ecosystem transactions. And if we actually remove even more, if we remove P2P and airtime transactions, and we just look at the ecosystem transactions, we see an even closer picture of what's going on, basically. And we should very much keep in mind that these ecosystem transactions, what sets them apart is that they're driven by partnerships and increasingly by APIs as well, but some sort of partnership. That's why we call them ecosystem transactions, that they're reliant on other partners. So they're obviously what makes mobile money more of an advanced digital service. So firstly, as you can see on the pie chart here, bulk payments account for about 40% of ecosystem transactions currently. And as our first point on the page here, you can see that over a third of monthly active accounts now receive salaries via mobile money. And I think it's worth mentioning here also, like Africa is very much, a world leading when it comes to receiving salaries via bulk payments. It is the private sector that's pushing bulk payments in Africa. In some other regions, we see more government involvement, more social security payments, and so on. But in Africa, it's very much the private sector that's pushing it. And then our second point here, we're looking at bill payments accounting for 31% of ecosystem transactions. And as you can see, bill payments are very much led by utilities. So helping to give people access to essential services. 61% of all bill payments are coming from utilities. And then on to the next point, 73% of mobile money providers that partner with agribusinesses and cooperatives. It's a bit of a caveat here. These are from last year's survey, and we had about 41 services who actually answered this question. So it's a smaller sample than the rest of the data. But the reason we've included it is that at the end of the day, it's very important to remember that the majority of the economies in Africa, obviously, are still dominated by agriculture. So the partnerships with agribusinesses and cooperatives can obviously have huge impact. And our last point is our point about government agencies. There are increasing partnerships with government agencies, which of course is very interesting. And that's both person-to-government payments, but also government-to-person payments. And we should have a not too old paper on that as well, actually, on our website, if that's something that you're interested in. So all of these, the last couple of slides, this is all trend one. This is looking at the digitization of transactions and how that's happening. And I'll sort of pass through trend two a bit quicker, but I think it's worth just highlighting how, as I mentioned before, what a big sort of moment this is in the industry's history. And this is reaching this threshold that more money is now circulating in the ecosystem than exiting. So $13.6 billion in circulation, that was in December 2019, compared to the 12 billion exiting that I mentioned before. So as I said, this is the reason this is important is, when mobile money started, essentially person A cashed in as an agent, transferred the money via P2P to person B, and person B then cashed out as an agent. And reaching this digital threshold when more money is circulating sort of shows that that mobile money is truly starting to digitize economies, I guess. It also, I guess, it means that a lot of the mobile money providers, they've sort of pinpointed what successfully sort of keeps money circulating in the system. And as you can see on our right-hand side here, P2P transfers are just continuing to just explode, essentially. They've doubled in value since 2017. So just over the space of 2 years. And merchant payments, as you can see at the bottom of the screen, are still growing very quick, 34% year on year. But the growth in P2P payments is just, it's so quick, so that we don't see any sign of P2P transfer slowing down. And in terms of the circulating value, we don't really see merchant payments taking a lot of chunk of circulating value, despite growing at 34%, which of course by most measures in the world are very quick. With that, I'll hand over to Kennedy, who will take us through some of the regulatory developments on the continent.
All right. Thank you, Simon, for that. So basically now I'll take you through the regulatory trends for the region, which is Africa. And as you may all have seen, mobile money continues to grow in leaps and bounds in the region. This is largely attributed to the improving regulatory framework in the region. And on your screens, what you're seeing is a snapshot of the regulatory index scores for Africa, and more specifically here, these are scores for 42 countries in Sub-Saharan Africa. For those who may not know, the regulatory index is a tool that measures the extent to which a country's regulatory framework is favorable for mobile money adoption. So the reason why I show you what is on the screen is we reviewed regulations for 42 countries in the region, and they demonstrate the great improvements that countries are making, especially in the region, just to ensure that mobile money adoption continues to grow. Now, on the screen is a list of 42 countries, 15 of which had an improved overall index score, which means they now are more favorable for mobile money. Just to single out a number, a few of them, Nigeria, Botswana, and the CIMA countries introduced new payment regulations in 2019, which now allows MNOs to acquire payment issuers licenses under the direct supervision of central banks, which is a progressive move indeed. And for more information on the index, I will request that you check the index on our GSMA website. Now, if I could just move to the next slide. Yes, so just a quick overview of the observations that we made during the year, which is 2019. Mobile money taxation continues to be a growing concern for the mobile money industry. This currently affects the Republic of Congo, Cote d'Ivoire, we have Uganda and Zimbabwe, and the Republic of Congo. Now, these are countries where currently we have active mobile money direct taxes, which of course have a huge impact on the marginalized groups who tend to use mobile money more than the other groups within the different populations in these countries in the region. Now, Malawi and Gabon also had similar taxes, or rather they proposed similar taxes, and thankfully the governments basically reconsidered their moves on this, and currently those countries do not have a tax, a move which we hope these other countries that currently have taxes will also be able to emulate and continue to foster the growth of mobile money. Countries in the region are making efforts to ensure that mobile money customer data is protected. Taking you back to the regulatory index, one of the things that we also witnessed is that 10 countries made significant improvements within sub-Saharan Africa on this important regulatory parameter. These are Botswana, Uganda, Eswatini, Malawi, and again, CIMA countries, which are regulated by the BEAC, which is the BEAC, the regional regulator for the countries in that region. However, data localization requirements in some countries continue to be a challenge for mobile money providers. There is need to adopt holistic data protection laws that allows at least cloud storage of data and also cross-border data sharing. And Rwanda presents a framework which will be adopted very soon that we believe is one that many countries can also emulate in trying to continue to promote the growth of mobile money through good regulations. 18 sub-Saharan African countries now have eKYC capability, up from 15 in 2018, which is also a very significant improvement. This is attributable also to electronic ID platforms that have been developed by the respective ID authorities. And we see this as having a very positive impact in the sector overall. It will go a long way in supporting especially remote and instant verification of KYC information, and of course driving efficiency in the customer onboarding processes. Just to name a few examples, Liberia, Malawi, Zambia are just some of the countries that are the latest to introduce these capability. Mobile money platforms also are increasingly becoming interoperable, as my colleague Simon mentioned. The Bank of Mozambique, for instance, approved bilateral interoperability for MNOs without imposing any technical standards. and deadlines, which we think is a very progressive move indeed. We also see that regulators continue to drive interoperability of payment systems through centralized solutions. For example, the Bank of Zambia, which launched a national switch in the year 2019. There are similar plans to have similar solutions in DRC and Tanzania as well. Well, one of the things that we also saw it well to present to you as I move to the next slide is just to be able to present to you the COVID-19 situation and how it has impacted mobile money. We do appreciate the fact that this is could be a 2020 issue, but then of course, due to the importance of the matter, we could just highlight just a few highlights on what we've been able to notice in the industry thus far. Well, in the wake of COVID-19, a number of regulators in the region came up with a raft of measures to drive digital payments and mobile money in particular. This included fee waivers, flexible KYC requirements, declaration of mobile money as essential services, amongst others. MNOs also proactively made adjustments to the product offerings to promote the resilience of mobile money customers during these very challenging times. Tapiwa mentioned how agents are important within the ecosystem. Support was also offered to mobile money agents, specifically around liquidity needs, and to also the provision of things such as water and soap to just mitigate the spread of the virus, considering many people trooping to mobile money agent outlets. We also saw an increase in social and humanitarian transfers. This continues to happen within this time, and I think it's also a show of the trust that humanitarian agencies and governments continue to have on mobile money. So while all these measures are quite progressive, and as I move to the next slide, we noted that some of the measures such as fee waivers have lapsed in some countries. However, in some countries this continued to be in place, and in some countries the validity has not yet really been indicated. This has put a strain on mobile money providers, and we continue to call for dialogue between regulators and operators to ensure at least they have a chat around this very sensitive issue to ensure the sustainability of mobile money. Increased transaction limits as a measure and flexible KYC have been made permanent in a number of countries. A positive move indeed, as it will allow SME players to use mobile money payments more, but of course further drive mobile money adoption. So while this is just an overview, we continue to monitor this, and more on this will be relayed perhaps in the near future. But for more, please check the GSMA COVID-19 tracker, which is available on our website as well. And thank you so much. I think I'll give it back to you, Simon, to continue with the presentation.
Great, thanks, Kanere. Yeah, I mean that's more or less it. I think we're running out of time a bit. I want to make sure that we have enough time for Q&A, but I'll sort of whiz through the coming slides. But essentially, we just wanted to highlight sort of what the future looks like and where the areas of opportunities might be. So we've identified 3 areas here. First, accelerating the shift from cash towards digital payments, as we've already discussed. We're well on that journey. Then 2, expanding mobile money-enabled international remittances in Western Africa. I'll mention briefly why West Africa is particular here. And number 3, enhancing the delivery of humanitarian cash assistance. So if we just briefly have a look at the first one. So this is I'll try to make this slide as easy as possible, but this is the distribution of digitization levels among African deployments. So if we look at the x-axis down here, we can see that basically the 5 services out here, on the right-hand side, they are the most digitized. And then the 16 services down here are the ones that are least digitized. And as you can see, there's a skew to the left here, meaning that most services are still reliant on cash in, cash out transactions. In fact, it's 39 of all services, 69% of all services are still reliant on cash in, cash out. So we're hoping to see a switch or a shift rather along the x-axis so that more of these services are closer to the right-hand side. And by that, digitizing the transactions of also the smaller players. The second point, West Africa. The reason why West Africa is so interesting is that 40% of all mobile money-enabled international remittances right now are sent and received in West Africa. There are many reasons for that. There are huge diasporas in other parts of the world. There's also a lot of cross-border trade. For historical reasons, the countries are smaller and so on. But there are huge opportunities there. And for example, Liberia recently changed their regulation, I believe. Maybe Kennedy, you know this better, but I believe Liberia recently allowed remittances, and that's if we go a few years back, I think it's almost around 20% of Liberia's GDP that was coming from international remittances. And we have other countries in the region: Gambia, Senegal, Bissau, Guinea-Bissau, and I believe even Togo is around 10%, somewhere there. So there's a lot of opportunity for mobile money providers to tap into this. And we have this big figure at the bottom, which is 3.2 billion is flowing in on a monthly basis in Western Africa through formal remittances. So that's through bank and everything. So, but there's a huge opportunity for mobile money providers to essentially help money reach further due to the distribution networks that we have as well within the industry to help remittances reach end users quicker. And then the last point, which is maybe unfortunately but very topical, it's that mobile money can be a superior mechanism for any humanitarian support during crisis. Essentially reach more people during crisis. In Africa, there's currently 25 million forcibly replaced people. And that's not just because of conflict, there's also natural disasters that have happened. Unfortunately, a lot of those. And with increasing erratic climate, unfortunately, we're likely to see more of that. But currently, the number of mobile money services that are connected to humanitarian organizations are currently connected to 11 different organizations. It's a very, very wide network, essentially. And in 2019, prior to the COVID-19 pandemic, we saw cash assistance delivered to over 1.7 million unique mobile money accounts. I believe that was in June 2019. And I think it's also interesting. We saw the World Food Programme winning the Nobel Peace Prize just the other week. They are one of the organizations that are thinking about switching to do these sort of cash deliveries rather than in-kind donations and so on. And obviously give more agency to the end users. But anything on the sort of humanitarian topic, we do have a sister program called Mobile for Humanitarian Innovation. So you can find them online if this is your area of interest. So just to summarize, accelerating payments, the shift towards digital payments rather, expanding international remittances in Western Africa, and enhancing the delivery of humanitarian cash assistance. And with that, I think we'll move into our Q&A. We're a bit strapped for time, but let's try to sort of fit in as many as we can. We have about 10 minutes. Maybe let me have a first look at. I can give one to you, Kennedy, first, maybe before I have some time to go through all of the questions. And we have one question on asking: do you see any emerging trends in regulation that you expect will stifle innovation among mobile money providers, similar to some regulatory forcing interoperability on some systems?
Well, thank you for that question. Well, by and large, I think the regulations are generally very progressive in the region. So in terms of how regulators are coming up with the frameworks for mobile money, I think there's no much concern. However, what we are seeing perhaps is just a few trends which may inhibit the growth of the service, but not directly. These are not really measures which I would say lie under the purview of the central bank only, but also, under the purview of also other, arms of government. For instance, taxation is an issue that is not generally, controlled by central banks. Taxation is indeed an issue that we are concerned about, and one that where we hope, different countries will be able to just, maybe reconsider their move, as I mentioned earlier. It calls for dialogue for all the stakeholders involved, and in many countries that we have been, we've also seen central banks speaking strongly against mobile money taxation. So it's more of an issue of having dialogue between the different arms of government just to ensure that the growth of mobile money is not inhibited. Perhaps the other one that I would mention is interoperability. On interoperability, I think generally interoperability is good for the industry, but there's need for dialogue on all the players involved just to ensure that the solution works for everybody within the ecosystem. Well, I hope that answers the question, but we have done a number of publications on interoperability and taxation, which our participants can check.
Great. Yeah, no, as always, timing is crucial when it comes to interoperability. But I want to address a couple of early questions that just to sort of straighten out a few of the question marks. We had one question which asked whether or not China and the USA are included in the data. They are not. The services that we're looking at are services that should be fully accessible to the unbanked, meaning that if a service sort of functions as a channel to a traditional bank account, sort of your normal mobile banking app, then we're not looking at that data. So these are services that are fully accessible or fully available to the unbanked. Another important question to sort of tackle here is on the definition, our definition of mobile money, whether or not it includes banking services. So we should say we're not just looking at mobile network operator-led services. If a service is bank-led or fintech-led and can be accessed by the unbanked, then we will count the service. And it's important here that these services also have a very broad distribution network, meaning you should not have to go into a bank branch and sign up for the account. You should be able to sign up at a smaller agent ideally at a distant corner of the country. And obviously, because if you live close to a bank branch, you are not as financially excluded as the majority of the continent, at least looking back a couple of years. So it's important to sort of nip those in the bud. And what else? We have a question on circulation. Does this mean that more mobile money is remaining or being saved in mobile money systems as less is exiting the system? So it's not necessarily about savings. It's just that people will receive money and have seen no use for it, have no reason for it to be cashed out essentially. Just as many parts of the world, if you split a bill after a meal, you receive money digitally, and you might use that money again digitally to pay for something else or to settle a debt with a friend or a colleague. So it's not necessarily about saving. Having said that, as the PR mentioned before, there are obviously a growth in adjacent services and savings, and building a savings culture is very important, of course, and mobile money is undoubtedly helping to do that, and that's primarily via partnerships with different formal institutions that are allowed to offer saving and credit services. Now, how accurate is the distinction between P2P and merchant payments? Where the latter is still very low in terms of transaction value. Yeah, so I think I mentioned it briefly. We do have both obviously anecdotal, but we do have primary research evidence as well, which tells the story of how much of the informal business activity is actually flowing through P2P. Primarily, it comes down to documentation for businesses. Most businesses don't have that, and when I say businesses, I go all the way down to sort of nano and micro, and talking about your fruit sellers in markets across the continent and so on. So obviously, those sort of informal business transactions will not be captured by merchant payments and are still within P2P transactions. And from our side, I mean, it's very hard to sort of dissect. Obviously, this is supply level, supply side research. So it is hard to say exactly what type of transaction is going on, and that requires more demand side research on the ground. And I think if we might see documentation for businesses and so on change, but it will probably take a very long time before it includes your average sort of hawkers in the market. I think, Kennedy, if there's anything on regulation that I feel that you think we should have mentioned, I've got a bit of a barrage of questions here. I'm trying to scroll through, but I know we had to mention previously about Ethiopia and what's going on there, and I believe you can say a few words about it at least.
Yes, well, thank you for that question. Ethiopia, continues to be a very interesting, market for us. There's a lot of movement currently, of course, with the liberalization process currently happening. We continue to monitor closely as the situation unfolds. I think they're about to get into a very interesting step, which is the critical step where they will now decide which operators will now operate in the market. We're not able to comment much on that at the moment, but we see a lot of opportunity, of course, for mobile money, especially in this particular market. We, of course, continue to watch closely and monitor and of course, explore every opportunity that operators can be able to take up in this particular market.
Great, thank you. I think one last question I saw one and very early one on sub-Saharan Africa and sort of why we're looking at more continental. And well, I've actually been in touch with the Office of the Deputy Head of the African Union Commission, and that's where we've had this feedback that it makes sense to look at things at a continental level, so that the data is more useful. This is, at the end of the day, this is how Africa has chosen to politically organize itself. So we're sort of following that lead, and we do see an overlap here between North and Africa, south of the desert. Obviously, Morocco Telecom is very active in Western Africa. We have Vodafone and Orange also being active in North Africa. So there are more similarities than differences sometimes. I think we're bang on the hour mark here, actually. Sorry, did you want to say something, Kennedy? Or otherwise, I think we might have to wrap things up.
Well, nothing much from me. I note that there are quite a number of questions that we have. Perhaps what we will do, we will perhaps compile some of them and just respond to each and every one of them. But some we might not have been able to address in this particular session, so we would perhaps just do a follow-up or something.
Sure, and I mean, questions can be sent through via email or at our Twitter handle as well. I'll actually check with our IT team and see if we can respond to some of these questions via Twitter, so that there's loads of interesting questions, and I'm really sorry that we haven't been able to cover all of them. So maybe have a look at our Twitter handle. You can see it on the screen there, GSMA Mobile Money. Again, thank you all for joining, and it was great to be part of the Financial Inclusion Week, and I hope you all join us soon again. Thank you all.
Thank you. Bye.
Thank you.